All right, welcome back to our live stream with WPAT, our London session for Monday.
I feel we should, before we move on, right, we need to talk first about the legal disclaimer, which was the comparison of rates. So when you invest in money, you're going through risk, and then everything we say here is for educational purposes only, right? So take everything but with yourself.
Yes. All right. So if you guys do want to, financial advice, this is actually not a place for you, right? But this is a lot of opinion pieces and just based on our observations of the market. Okay. So we're here to share and grow together. All right. So the week is exciting, right? We get to see finally the effects. Oh yes, actually this week is happening, the midterm elections. But before we jump there, last week was very exciting because of the non-farm that was happening on, Friday for us.
And then on a not so exciting news, China is breaking down policies. So then, wherever like was trading during the Asian sanctions, you'll see that everything Asian got weaker, and then the weak is dropped with
Well, actually, they've been doing this for quite some time.
Yeah, but then there was a big news on Friday, Saturday. I'm not sure the thing on the time anymore. Saying like China was like saying again how strong their and a lot of people are putting up the impact on that because if you're closing like both sections of our city with platform working on COVID, how can the economy work?
That's very true. All right, so let's quickly jump over to the news. Obviously, we are actually looking at some very important data that will be happening this week, right? Actually, last week was very exciting. We have the Fed's talking about interest rates. We have the non-farm payroll that was, moving the markets a little bit more, and then we have the CPI data that will happen this week. Yeah.
Not only that, they were predicting that the UK economy might enter a recession, right? Because all the time you have the Prime Minister saying that he wants to increase taxes and cut a lot of the costs they have it, so that they can balance out their GDP or can balance out the government expenditures. And then on the other side, you have now the banking that's saying that if they actually do that, then we're going to have like a big recession that's going to last like for a really, really long time. And this will make the guys start to feel wary of the a lot of people might run away from the recession.
Yeah.
We are right now and go for undercurrent like euro or CHF.
Yeah. Well, some news actually to show about how the market's actually working, and it's close to the UK. Is actually, let's take a look at this. What's from business, from MoneyWise, with regards to Morgan Stanley's observation of luxury watch pricing. Okay. Actually, watches and bags, or limited bags, used to actually be a major investment to follow. Okay, they work. Why are you laughing?
I feel there's a little bit of the personal
It's
opinion
right
on
there.
top
Look,
of
we're
it.
talking about news. Look at this. It's in front of everyone's eyes, or
Okay.
up there actually, up there, that way.
Up here.
Yes, up here as well. Yes. All right. So, based on the watch prices, is something very, very interesting to observe. Usually, what people look at is Rolex, and they also look at PP, right, for actual, market momentum, right? And actually, supply have actually been outweighing a lot of the demand right now. Okay, and what happens is that they're seeing a plunge in the price, not in just the new retail watch market, but also in the second-hand market. So hey, when people are talking about recessions and whatnot, this could actually be a major indicator of the fact that this is possibly not the case. Because in these luxury good industries, they're not canning anybody from their jobs. but rather if you're looking at the big tech companies, yeah, now it seems like everyone's hurt because everyone's eyeing in on just big tech, right? Already, we're looking at Twitter, right? Elon Musk has already taken his role as the CEO of Twitter, and obviously just canning a lot of people from their post.
Yeah.
I don't
A lot
blame.
of controversy.
I don't know why a lot of people are blaming him, but hey, look, we're here to do business, right? We're not doing charity, so I get it. And I've heard, well, I'm sure a lot of people have seen as well on the news that the compensation plan is not that bad, right? For people who are being
But
requested to leave.
well, but then the CEO is trying to not go for the compensation plan, right? But then another point on the Twitter thing is that when Elon, like last week, when Elon assumed as the CEO, he was very vocal on Twitter, right, saying that it's not a sustainable business model, right? So then that's why he want to charge the $8 per verified user to see if he can, I'll say, maintain the platform, right? Well, then if you're an investor and then like let's say you bought stocks from Twitter and then you hear he's saying like, oh, this doesn't seem very sustainable, we need to start charging money out of nowhere, like you would lose all your confidence. So then of course the stocks end up dropping with it.
But hey, look, as we've already seen, he's able to actually conquer lots of businesses, right? He's working way harder than most human beings. I mean, there's a reason why he's on the Forbes richest list, I guess, you know?
That's true.
So all in all, hey, look, we could probably learn something from one of the best, okay, that has proven themselves via their wallets and their basically monetary valuation of the individual. So we could probably learn a few things there and here, right? But on the other side of big tech, we're looking at Meta, which is the parent company of our most loved Facebook.
Instagram,
Yeah. Yeah, they're gonna just cut more people out. They're laying off a large amount of people happening this week. It will be Thursday for most of you guys in the UK, but it will be Wednesday, I believe, for any moves to happen to kick out people, to lay off people, okay, from Twitter in the US. Okay, so this is actually going to hurt their stocks a lot more. Okay, well, anyways, that's pretty much the news that is happening, right? One of the things with cryptocurrencies as well, okay, just before we jump over, cryptocurrencies, it seems that it's getting closer and closer to fiat currencies. Okay, I'm sorry, I should not have said that. I know this is going to cause a lot of controversy. I have my point here, okay? Basically, they do have something called the CMDC. Oh my God, what is that acronym? I'll find it for you guys later. But anyways, it is basically where central banks, right? They're creating the digital currencies.
Yes.
Central bank, CB. Oh God, I'm gonna search that right now.
You should always search off screen.
I should do it right now. Central bank cryptocurrency. What is this called? It's called CBDC. There we are. I made up the M's. Ignore me. Yeah, so CBDCs. Okay, yeah. Now, sorry, you can continue.
Yeah, and I do feel that that's the, I'd say, it's the central banks. They have like the panic of, oh my God, if everybody's on crypto, there's no way for me to make money out of it. So then they have to adapt, right? And then I feel that's the answer. So,
well, hey, look, actually one of the crypto CEOs or one of the biggest crypto brands out there, FTX CEO, he's actually pushing for regulating crypto as well, though. He's very pro-regulation of crypto. So how do you say about that?
let me be very political and say we need to understand what are his motives first. Like, is it only his interest? Is it the interest of his company? Is it the interest
I'm not too sure about that being
regulators?
political. You're pointing fingers right now.
So then where the motivation is coming from? That will be my question. Because if you ask for any, like, every individual as, like, you're just a normal, regular, average Joe that you have crypto, then of course they don't want to be regulated. They want to be anonymous. They want to be like this is my money, nobody knows I have this money. Like is the same way like how many people when they win the lottery they go wearing masks or costumes so then the family doesn't see that they have money right now, right? So then if you open up like, oh hey, this is how much money you do, then a lot of people will be angry, and then I feel that a lot of people lose trust on the crypto.
But I have to say though, on both sides of the spectrum, I think there's pros and cons. Okay, so anyways, look, I'm pro fiat currencies. Okay, like this is why we're here talking about forex, right? All right. So anyways, basically FTX is something to watch out for. A lot of people are actually pulling the plug on FTX. This is not me just bashing them or whatnot. In no way, or form we're related to FTX, right? Okay. Now, obviously, I'm just throwing out the observations and opinion piece only, okay? So basically, FTX, we noticed that Binance's CEO has actually been selling off some of their holding of the FTX coin. Okay, now they're actually dropping off everything, and he's actually writing very publicly on Twitter as well. He literally stated, okay, that due to all of the noise on social media, okay, Binance has decided to actually pull its investments of the actual token from FTX, which is essentially free tokens that were generated, giving out for free, for people who are supporters of FTX and their whole ideology. They were giving out literally free tokens. So possibly this is what is, caused this collapse or whatnot. But hey, we're not here to talk about the whole situation. It could also be a big issue where a lot of people are, noticing that he may be a little bit more pro, like Mr. Fried is actually a little bit more pro regulating the crypto environment. And maybe this is what makes people feel uncomfortable. But all in all, we are seeing, basically crypto and fiat currencies getting much closer to digitalizing themselves. Okay, so then it will be actually faster access and faster trading. And look, it's going to be here to stay, right? Whether be it centralized banks or decentralized banking, they're here to stay.
Yeah, and then just another big point is that why the crypto is so sensible to these things is that if you go for the fiat currency, like you have a whole country, like a whole economy behind it that will support the country, right? So then there's no way you have like a rug pull or like suddenly the dollar is €1 and then now it's like cents of a euro. Like it's not gonna happen, right?
True.
But then if you go for the crypto, then it's purely supply and demand, right? There's nothing behind the holding.
Yeah, sorry, and I just noticed that we did not change the time zone. So now we're on the proper time zone. Okay, GMT plus 0. We're in London time right now. All right, so basically, what are the news that are happening today that we should actually watch out for? Actually, all news is important. Obviously, some of the bigger ones we should actually look at is actually the European Central Bank. They will actually give out, Panetta is going to give out a speech, potentially giving us a more overview about the inflation and their effects right now. Okay, so we could actually take a look at that, see what's going to happen with the euro pair. Right at your 9:30.
I'm surprised that the Bank of England speech is marking as a low impact, especially like when like, is it recession? Is it not? Are we going to increase the taxes or like what we do?
That's very interesting though. But technically speaking, they've already dealt with the interest rates.
Yes.
Right. So technically.
But now it's the tax versus recession argument that they sparked last week.
True. But then if they were holding on to the whole European Union's funds, then there would be a different importance now.
Makes sense.
Yeah. So I guess that's Brexit. Yeah. Just blame it on Brexit. All right. So anyways, I don't know if it's good or bad for the UK in regards to Brexit, but hey, it is what it is. Let's move on. All right, so what are some of the more high-impact news? It's going to happen tomorrow, well, technically tonight for you guys, right? Basically for Australia, okay, Consumer Confidence Index for November is going to be actually announced. And also for Bank of Japan, they will be announcing basically the summary of how they are, of their operations, okay? So basically, Bank of Japan is something to be excited about. I don't think it's medium impact. I think if anything, it should be high-impact news. They have been doing a lot of manual work, helping a lot of traders earn quite some money during the pullbacks.
It makes sense.
Yeah. So, kudos to you, Bank of Japan. All right. So I guess, Chilo, let's jump on to the MT4, which is not on yet. Time for a joke.
No, any political correctly one.
Oh.
Yeah.
All right. Good. The MT4 saved us. All right. So over here, what we're going to actually be doing is... Oh, wait. Maybe we already have the setup done. Okay. So one more time. Okay. Before we actually jump into the whole technical analysis. Okay. This week did start off with stocks in the U.S. all starting in red. Hopefully by tonight, the New York session would actually revert everything back. Okay. Because based on the interest rates and everything, it's based on plan. So, the Bank of America, or should I say the central bank in the U.S., they clearly understand their game plan for fighting inflation.
And not only that, like we said before, the Asian market started very weak. So then all the Asian currencies, they lost power in front of the dollar. So then I do believe that the dollar will open a little bit stronger, especially because of China.
So first pair to take a look at, okay? Quick reminder for all of you guys who have not been following, okay? We are going to be looking at moving average, RSI, and stochastics, and be able to utilize these few datas, okay, that are the most popular in Forex or in most trading, to be able to give us a better understanding of the trend that is set thereafter. So let's take a look at the GBP USD. Okay, it did open up, on a bearish note. Okay, the GBP USD did open up with a bearish note. Now let's quickly take a look. Prices are actually trading all below the moving averages. Okay, RSI is trading below 50 on the D1, and stochastics indicate less of a strength, actually a weak trend, if anything. Okay, but let's quickly take a look if we do see possible divergences. Okay, so potential divergences, well, we did see one here, okay, but that's not very accurate, so we'll ignore that. Anyways, you should actually take a look at this peak and that peak. Okay, there's no divergence that occurred, so we're good to go. So H4, what are we seeing? We do see, oh, look at this exciting market thanks to the, should I say,
We had a big gap.
non-farm, yeah, there's a big gap that's opening up. So basically, still RSI on H4 is trading below 50. Okay, not enough buyers are in the market right now. Okay, we are seeing the moving average slowly cross behind, our midterm moving average. If it does close behind, fall behind or below our long-term moving average, then this is a very strong indication that the bears are supreme and they're taking over for now. All right, so let's quickly take a look at H1. Okay, H1, you see the market did actually open up below, right? The market with the gap. I suppose the markets are trying to close the gap. Okay, but potentially there may be more bear momentum for the GBP USD.
Yeah, the stochastic RSI both pointing it down as well.
Yeah. So technically speaking, if we were to actually set up in a trade, I personally wouldn't be jumping in on a trade on any of this. But if you do want me to jump on a trade, what I would do is I would aim at closing the gap.
Really, I will go for the sell actually because of the how the RSI on the bigger time frames are still below the 50.
Yeah.
And then the most recent candles is also the bearish. So I would be looking for the sell.
I would expect that maybe the sell will happen a little more on the New York session. Yeah, where they're going to be pushing the prices of the US dollar up a lot more.
Yeah, so then if the dollar gets stronger, the chart will drop.
Yeah, it's supposed to go down.
Yes.
Yeah. All right, so technically not enough momentum here. Let's move on to the next pair, Euro USD. All right, Euro USD, we started off basically with the market on a lower note, but then overall trend is quite bullish. most likely we're prepping for the speech of Bank of Europe, the Central Bank of Europe tonight. Technically speaking, based on the candlesticks, this is a bullish engulfing. Bullish engulfings indicate a strong buy momentum. RSI is above 50, so that's great. Stochastics is climbing up, is showing that the trend is there to stay a little bit on D1. Okay, on H4, what do we see here on H4? H4, this looks a lot like the GBP.
It does.
A lot of people just sort of, let's buy, and then, major gap, and then let's buy more,
Yeah, but when it's like this, it just means that it's the dollar that's playing the role and not the euro or the GBP.
Yeah. So, technically speaking, do we see any major candlestick patterns over here? Not really, right? If anything,
maybe an engulfing happening right now.
We could see the potential of engulfings, a bearish engulfing, right? Now let's use H1 to confirm. All right, H1, we do see the RSI is traded overbought, okay? So people are actually doing sells on this now, but overall trend right now is actually bullish. So based on candlestick patterns on D1, what we should be aiming for is most likely on a buy order. But it does seem like the overall trend
on the short term is more on the sell.
Yeah, but you see over here, overall it is starting to climb up, but it does seem like a stronger trend for sells. Yeah. All right. Okay, so the last pair we should actually take a look at, the USD CHF. There we are. Okay, so D1. We're looking at a bearish engulfing, okay? All prices are trading above the moving averages, so strong trend, bullish, okay? RSI is still above 50. Oh, that's great. It's waking up. Stochastics are not indicating a weaker trend. No. Okay, so most likely we are going to be following a trend. Okay, so a potential trend going upwards, a bull trend could happen. H4 will be confirming that. Let's take a look at H4. H4.
The RSI on the region should go down.
Yeah, but then it does seem like our long-term moving average is acting as a support. You see, it bounced all the way back down, and then it seems like there's still more buying momentum. All right, so let's take a look at H1. Let's take a look at H1 if the momentum, there's more buyers. Okay, on H1, it does seem that potentially there's more buyers, or buyers are here to try to test the market.
A lot of weeks though, which shows uncertainty.
True, but then yet we also see one thing here. This is called a hammer. Okay, whenever you see hammers are a good indication of a potential reversal. Okay, so especially when the market is coming down like that and you see a hammer, there's a high chance of a reversal. Especially the fact that the RSI was trading below on the oversold zone. Okay, so for me personally, I would actually be jumping on a buy order right here. Okay, so we will be entering into a buy. Okay, why? We're utilizing the D1 and then also the H1 candles as our indicators. Okay, once again, this is not financial advice. This is purely for educational purposes and entertainment purposes only.
To me, the sell is a little bit early, especially on the H1. The RSI is even lower than on the H4, right? H4 is like almost 50, but then here is around the 40s. But if you're right, you're profiting more than
usual.
If we would have waited until the RSI reached.
I agree. Usually, a lot of people will always say the RSI will be utilizing the mid-range, right, 50, to indicate whether you want to be on a buy or a sell. Now, for me personally, okay, not financial advice. All right. So one more time, I'm informing you. Okay. So if you do make profit, hey, do just comment below and tell us that. Hey, thank you, we made profit. Yeah, you were right. Okay. So, but if you didn't, hey, look, this is not financial advice. One more time. Yeah. Now, usually my personal opinion would be utilizing the overbought and the oversold zones. Okay. I'm not a big fan of the 50 range point. Okay, why? Because that gives you too little certainty regards to the trends that are about to happen. Now, if I were to actually utilize the oversold or overbought zones, okay, I may be fooled up to 3 times from the market, but overall, I will be able to know that, the trend is going to be on the accurate side. So if my pockets are deep enough, this is a great idea to utilize, let's say, greater martingale. Okay, not a I'm not
Promoting.
Yeah, I'm not promoting, or nor am I an advocate for martingale. Okay, it's super high risk. So hey, use at your own risk. All right. So anyways, this is going to be a buy order. Okay, and most likely, if anything, we will be utilizing H4 as our take profit points. Okay, on our recent support and resistance points. Okay, so let me move that. Done. That's not that looks not. There we are. Okay.
Sorry, but yeah.
Yeah. All right. Okay. Well, is there anything else you want to share? Just kick off a week for everyone in London
No,
and the rest of the world.
It's like with the elections, which I believe is going to be tomorrow in the U.S.
The midterm elections happening this week. Yeah.
For the Congress, also the Senate. So then I do feel that this will shake a little bit the overall economy. Right? It's like how much support will Biden get it, or how much resistance he'll get it. So then a lot of the investors will be looking at that. So then, as my more conservative side, I would just wait it out for the elections.
Or you could be like greedy like me, which is thinking, hey, because of the elections, everything is going to go in the green for the U.S.
Yeah, you can do that setup, like you put a pending buy, a pending sell with a stop, with a big profit on both sides.
That sounds a lot like how people trade non-farm.
It is, and then whatever hits, then it's like you go. But then the spread is gonna be so high.
Usually for elections, though,
Yeah.
they are going to try to prop up the market. So this is just a little bit of a tip. The U.S. economy, they're just trying to make it look good. So then obviously this is going to be on the green for most.
Yeah.
All right. Well, thank you for the last tip. Okay, and I guess we'll see you tonight on our New York session.